Hello, everybody, and welcome to the next episode of the Rational Trader Podcast. JD here with my co-host Louis Navalier. Louis, we've been talking about the great American stock market melt up. So this week has maybe been a crescendo. I had your compadre Ivan on the podcast last week, and to his credit, noted that Friday expiration day last week was a blow off top, and now it seems like there's some skittishness, but I think we were saved by the inflation report today. PCE came in right at expected 3%. 3% inflation is extremely, people don't realize, but inflation is really great for asset bubbles.
Yeah, that's true. Well, let's be clear. Thursday, the economic news was too good. So the market sold off on good news because they were scared that the good economic news would stop the Fed from cutting rates. So the PCE gives hope that the Fed might cut rates again. The but what happened Thursday is you had new claims for unemployment collapsed. Just a few weeks earlier, they were at a four-year high. So that raised some questions, what's going on, although that's volatile data. We had the trade deficit come in a lot lower than expected, so that's going to be an upward GDP revision. But imports fell 7% and exports fell 1.3. And we had a GDP revision for the second quarter up to 3.8. And then finally, we had very, very strong durable goods orders. Military spending was up 50%. Transportation's up 7.9. Obviously, Boeing got a lot of orders. You back all that out, core capital goods are up 6/10. So there's an ISM manufacturing report next week, should be good. That should benefit on that. We have consumer confidence. We expect it will be good. In the PCE report, we also had, personal income rising 0.4%, but personal spending was going up faster. So consumers are obviously must be feeling better if they're taking a little debt. And things are pretty good. And the only uncertainty out there right now is the tariffs. Uh, President Trump told all the branded pharma companies, so this affects the ones that charge a lot of money for their drugs, not the generics, that you're going to have 100% tariff on October 1st if you don't break ground or start construction on a U.S. Manufacturing facility. So this is meant to divert the manufacturing from China, Ireland, Switzerland to the United States. And then he also took a shot at the furniture business. So restoration hardware crashed and burned. You might want to look at that if you're looking for a stock on a pullback. But
Yes,
obviously, most of the furniture is
you
made in
beat me
Asia.
to the punch.
Yeah, and but yeah, that payroll report next week is going to be a big, big deal. Okay.
Louis,
Well,
you said something interesting, and I want to maybe dive deeper into it because I'm a simple guy. Up is down, and the earth is round. But the
no,
market, the
no,
markets,
I have to correct you. I'm sorry. If you've been to Regina, like Saskatchewan,
yeah,
the
yeah.
earth is flat.
Oh, okay.
Yeah, if you spill water, it doesn't go anywhere for 1,000 miles.
Well, wow.
The earth is flat if you go north of you. Okay.
And we did not land on the moon. That was a full Hollywood production, and
Okay. Okay. All right.
well,
So,
what just I always struggled with when I was very early in my career, 35 years ago, was, how perverted the market is, where good news is bad news. And you mentioned the good news yesterday. It was fantastic news, should be celebrated. And economic growth is super, super strong. But the market doesn't like good news, but it'll celebrate bad news.
yeah, it will. It will. But the bottom line is uh, earnings are very good. The dollar is getting its mojo back. People are figuring out that it's just better in America. There's still the budget concerns over Britain and France. Of course, the other interesting news this week was President Trump at the UN. They stopped the escalator for him, and fortunately, he and Melania didn't fall. But then the teleprompter didn't work, so he just decided to go off and do it his way, and he let him have it. His UN speeches are pretty famous. I mean, I think 6 years ago, he was telling Germany that it's stupid for them to buy all their energy from Russia, and they were all laughing at him. And now I guess they're not laughing anymore. And he let them have it on the Green New Deal. It's going to net zero is very complicated. The EU is supposed to be reconsidering the emissions standards for auto companies. So I guess most cars are going to be hybrid now, and but the push to make everything all electric might end soon. And
He
uh,
also talked about Ukraine, and that to me was interesting
oh
because
yeah, yeah, he can take
he's
back all the land now. So
yeah, yeah. And so then now you have in response ramped up Russian drones flying into NATO airspace. So
well, what's interesting is Russia has a fuel problem. They've bombed 10 refineries. Ukraine has, and so there's very serious fuel shortages throughout Russia now. So it's war has consequences,
absolutely.
and now that wars are automated video games, all we have to do is turn up the heat on what will allow Ukraine to do, and we in theory could push Russia back. I mean, obviously the land has been decimated, okay, and I don't know how many people are left in those territories.
Right,
So
right.
it's uh, but we'll see. It's the borders over there were fuzzy to begin with, so this will be very interesting.
What's remarkable to me is the markets, you know, at least at the moment, close their eyes to some of this exogenous risk that is clearly out there. Now, I guess Thursday was a down day, but I mean, really, was it a down day? It wasn't down that much.
Wasn't down for gold, and gold remains an oasis out there, and the central banks continue to buy a lot of gold. Yeah, if you're worried about the world ending, just load up
Gold
on
seems to be headed to 4,000 an ounce.
yeah.
That might be happening before the end of the year.
Yeah, I'll be doing a video of Mark Chaikin soon, in a couple of weeks, but Mark Chaikin did screw up one of my clients and scared him, and so he's mostly gold stocks and he's fortunately doing very good, but
Hmm.
he got scared, and there's a lot of people using NVIDIA to attract attention because NVIDIA gets a lot of hits on the internet, and obviously, although I'm pro being long NVIDIA, a lot of people are saying it's time to sell, but that's just a trick for them to get a hit on the internet. And people have to realize that we live in the world of Google Analytics. So I just read there's a manic squirrel in California attacking people. So if you want more viewers to your show, all you have to do is show a picture of that manic squirrel. I think they got it flying through the air, attacking people. So
You know,
it,
squirrels
it,
are ever since I can't remember the name of the show in the 1970s, but they always started with a squirrel on water skis. I don't know if you
yeah.
remember that.
By the way, in Minnesota, do you have the black squirrels?
We do not. Well, I mean, I suspect we do. They're not very prominent. The brown squirrel is really the.
Yeah, the last time I think I saw black squirrels was in Quebec.
Hmm.
They're very common up there.
Yeah, further up north they may be.
Hmm.
We're pretty far south of where the natural habitat of the black
Hmm.
squirrel would be.
Hmm.
Definitely have black bears, and I don't know if you saw the cat chasing uh, the coyote that you sent me.
Oh yeah, yeah. Well, there's another one I did not send you. of chickens chasing a bear.
Really?
And I was in Santa Rosa last week, and uh, in the neighborhood I was visiting a client at, they had these chickens. I couldn't believe how big the damn chickens were. They're breeding monster chickens. In America, we can grow a broiler chicken faster than anybody else, and our chickens are so much bigger than the rest of the world. Um, so I think it's not only nutrition, I think it's hormones, whatever we're rejecting. But yeah, no wonder the bear ran away. These things were big, and they were organized.
Louis, the other news I wanted to talk about this week, and I wanted because I was confused. Powell gave a speech this week, and he's my favorite punching bag.
Mhm.
But he uttered a sentence that I was confused by, and maybe you can help me out. He said the market seems fairly highly valued. What the hell does that mean?
Well, he's got out of his lane. It's none of his damn business. Okay.
Exactly.
Um, yeah, we might as well talk about Steve Moran. He's been out making his case for 50 basis point rate cuts, at least a couple of them. And he says, although we don't, there's not a risk now, we have to be prepared for the next catastrophic event. And he didn't name it, but if we have a crash, it's going to come from private credit. We might have gotten a warning from CarMax. They had an abrupt decline in sales. I don't know if they were impacted by that subprime auto lender in Texas that filed for liquidation. I was supposed to hurt BlackRock and JP Morgan. But
Hmm.
we do live in a world where half of America has a debt issue. And that's why we have to get rates down to help these people. And that's Treasury Secretary Bassett saying that. And that's why you got to get rates down because people are just living paycheck to paycheck and struggling. So we'll see if we get there. But
Well, to me, the Federal Reserve thing, is just all kidding aside. It is serious, and like the risk of geopolitical upset in Ukraine and with Russia and NATO, the risk of having an incompetent Federal Reserve is a risk again that seems to be ignored by the markets. It
I
just
wouldn't
blows
say
me
they're
away.
okay. I wouldn't say they're incompetent, but they're definitely moving with groupthink. But obviously Moran's refreshing. Christopher Waller's refreshing. He's the one that foresaw the labor market problem before the big downward revision. And I guess the Lisa Cook thing's with the Supreme Court now, and so we'll see what happens there. But yeah, if there are people that don't like Trump who have been very outspoken, and he's taken them out. One was Lisa Cook. She said not very nice things before he got into office. Another was one of the FCC chairs. He wants to get rid of her. And the most obvious was Mr. Mendelsohn, the British ambassador, and Trump destroyed his life by releasing the Epstein details that Mendelsohn was a frequent visitor and stayed at Epstein's place, and also had some pretty kinky requests. Okay,
I'm sure.
he destroyed his life. The British media is not doesn't let up, and so uh, yeah, it's pretty obvious uh, you know uh, if you said something that Trump doesn't like, you're gone. So it's going to be interesting. I think the big risk, according to Moran, he didn't name it, but is worried about a potential black swan. Is the private credit industry because again, this half of America that has a debt problem, they're all being forced to that market. They borrowed at exorbitant rates, and we got to get rates down so they don't pay as much. And I know Capital One used to back Joe Biden, and the financial industry is very powerful, and it's got a lot of friends on Capitol Hill, and we do enjoy Jamie Dimon's comments, and he's a worrywart. But there's a lot of predatory lending out there to take advantage of Americans, and
Hmm.
that's why we got to get rates down.
And see, getting rates down to me, it's counterintuitive because the real issue is, I mean, nobody talks about the Federal Reserve balance sheet anymore, or if they do, it's hush hush. And this private credit is a function of the banking regulations being too strict, and so you have off reservation capital flowing, and all that capital flowing is unchecked for the most part.
Yeah, and we're going to see if it gets out of control. I mean, I'm down in Palm Beach, which blew up on leveraged munis in 2008. People were bragging that they're earning 13 to 16% a year. I went to one of the presentations, and sure enough, they're taking A-rated munis, they're leveraging them. They were using the AIG credit default swaps. And what happened is when the AIG failed, they had to unwind that leveraged munis very abruptly. And Wall Street dropped the bids, and those people lost 97% of their money. And those munis to this day are still fine.
Oh
Uh,
yeah,
they were leveraged up the yin yang, and the guy I heard talk was Jack Lew. He was the head of long-term investments at Citibank, and after scamming senior citizens in South Florida with these leveraged muni products, he became our Treasury Secretary.
yeah, he was promoted.
So people have to realize that Wall Street creates a lot of kinky things. They create an illusion. The issue of private credit now is the financial advisors are charging up to 2% to get in. So there's an entrance fee. They obviously get a trail when they get them in. It's like a country club. You don't know when you can get out. So, well, could be like a country club or a Roach Motel. I'll let you decide. Okay.
Louis, you and I had an interesting conversation offline this week about Wall Street, and specifically, I was seeking your insights into, the wealth management business and the attraction of high net worth individuals to working with Wall Street. And again, my simple brain doesn't quite understand why folks in that class of investor status, just insist on having their, assets with a private client group at JP Morgan or Morgan Stanley or
Well,
you name it.
I'm not anti-financial advisor. I know a lot of them. I have good relationships with a lot of them, but I am anti most of the firms. So the big private banking groups, Bessemer or Northern Trust, we have the offices here in Palm Beach. They're almost like concierge services. They're very nice people. They really try to take care of you. And Jamie, if you come down here as a rich Palm Beacher and you happen to have like a secret family or two that you don't want your current family to find out about, they'll work with you in discretion
They're good at
so
keeping secrets, is that what you're saying?
well they can try. Yeah, but I used to be in a lot of the money management programs at these firms, and the lawyers want mostly tracking managers because they don't want to stray too much from the indices. And
Yes.
so that's really forced that. And I had a lot of issues with operations and model management and how they executed orders. So I sold that business, but I'm not anti-financial advisor. Obviously, the big change was McKinsey took over Morgan Stanley. They hired Mike Baker, who was bearish, told everybody to get out of stocks, get into private credit, alternative investments, which just happened to pay more than uh, having a stock portfolio. So that's captured a big market share, but they've always been reinventing themselves. I can go back 30 years. Oh, you got to have international and international boom. And then, oh, you got to have ETFs, and then that boomed. And then
It seems like one of the attractions is it opens doors to these alternatives that they make it appear like you're really getting in on something.
well, then yeah, then you got to be ESG. So I had it's about 10 years ago. I had a five-star fund. I was top 1%. The president of the fund company was coming out to visit me in Reno. We were on the plane together coming out, and I thought he was going to do a marketing program with us, and because we had such good numbers, and he fired us on the spot. And to give our money to the Rockefeller family, who are big ESG folks, anti-fossil fuel, even though their wealth is from fossil fuels, Standard Oil,
You
and
can't make it up.
but they needed my record to sell because their record wasn't as good. And I pulled over 800 million out of this $2 billion fund, created this huge tax time bomb, screwed up the fund. Um, and uh, but Morgan Stanley was promising them all this ESG money that never showed up. So it was a false promise. So the if you can get the money to move from one place to another, um, it creates a lot of spreads and everything for the investors. So Wall Street's always been mutating and investing itself. It's funny, I run some money for people with whose name matches a big bank, and the reason they're having me manage the money instead of the bank is the bank has come in, sold stuff across the board, triggered all these capital gains, and that they didn't appreciate, and the management wasn't that good.
Hmm.
So, but they do throw great parties, they do great events. Obviously, if you want to get a Ryder Cup ticket today, it would help to be in one of those private client groups. If you'd like to go to Augusta, that would help. You just had the U.S. Open, you want
Yeah.
to go to the Super Bowl, they
The
do,
Ryder Cup is right up the block from
yeah,
Wall Street. So,
yeah, they do. This is some of the services they provide. And when I was in that business, working with financial advisors, we had all these sport boxes all over the country. We
hmm.
had the San Francisco Giants, we had the Dallas Mavericks and the hockey team, the Stars. We had a box in New York, okay, and for the Jets Giants. Then, of course, we had the concerts when they showed up those facilities. And yeah, I had marketing guys just inviting people. One of the things that annoyed me is, especially at the Giants box, is when it would rain, everybody would come to our box to get out of the rain. And then, of course, our bar bill then would be like 22 grand instead of 12 grand. And then, of course, people we invited a few weeks earlier would just show up to get free drinks. Okay.
Right.
So what we had to do is we had to keep moving the box around the stadium because you know, you know, people are coming there for free drinks.
Yeah. Well, it is it's an interesting world, and I guess I I'm curious when you do open up an account, Louis, with a high net worth individual in your private client group that has an existing portfolio. Why don't you spend a little bit of time walking through what that process looks like? Because I think that's
Well,
uh,
most of our leads come from uh my publishing reputation. You can't use a newsletter to sell management. So we have to have something called GIPS accounting. It's the Global Investment Forum, so actually looking at the performance of the real money
right.
versus newsletter money. But most people know me from the newsletter world. And um, so what's happening more and more is that people want these no excuses portfolios. They don't care whether it's large, mid, small, growth, international, domestic, international. And so I have no excuses portfolios for people. We still have a large cap growth portfolio that's very popular because it doesn't have the what we call the liquidity risk of going into the smaller mid cap arena where stocks can get a little bit more volatile. But so large cap, fundamental A, which is our strong stocks fundamentally, the Advantage portfolio, which is all cap, but we have a very good dividend growth portfolio. We still have a top-rated small mid-cap portfolios. Um, but there's things we don't do. So, I raised $3 billion in the bond market with bond UITs, and we don't do that business anymore because the firm we did sold out to a bigger entity. But if somebody wants income from bonds and things, I would refer them to somebody else. I have a good guy here in Florida, a JP Morgan guy that buys the bonds with minimal spreads. If somebody's over 10 billion, I bring in my bond guy, or 10 million, I bring in my bond guy to he's down in the Woodlands area in Houston, and Mike Lanier, I'd have him help people. The biggest problem is TLT, which is a 10-year Treasury ETF,
Mm,
has lost over 46% of its money in the past 5 years. So all those lifestyle products that Wall Street was pushing blew up
right.
because Janet Yellen lost control of the yield curve. So you're mad at Jerome Powell. I'm mad at Janet Yellen because she was totally incompetent. And we had an inverted yield curve, and she just sold bills and notes and abandoned the long end. And that the damage she did to the bond market investing is a big deal. Now, as bond yields come down from deflation in China and lack of inflation around the world, bonds will get their mojo back. But you never want to own bonds in a rising rate environment. So anybody that was in one of these lifestyle products that Wall Street creates just got decimated. So, and I was talking to a client, uh, a prospective client yesterday about that, and he got hurt quite a bit by that. And then, but he also has a lot of embedded capital gains. So when he brings his money over to me, I'll work with a capital gains limit. Okay, we rank the stocks best to worst, and we start selling the lower rank ones on upticks. We wait for an uptick to sell, and then um, but we don't want to just blow them out and trigger, $2 million in capital gains.
How long does that process take? Because
It take
it's an
years.
interesting situation. When you go from one advisor to another, they're picking you because of your ability to pick. You're an active manager, and you build a portfolio of the highest rated stocks. But I come over to you, and I've got this large portfolio, and they may not be high rated stocks any longer, but I've got a boatload of capital gains, just like you mentioned. So how long does that process typically
Years.
take?
It
How
depends
many?
on, a lot of people say try to keep your capital gains under 250,000 a year because, above 250,000, there's a 2.3% Obamacare tax.
Yeah.
And it's pretty hard to just, and my portfolios have tons of embedded capital gains now, that I work with their capital gains tax limit.
You know, it's it it being capital gains is a topic that we could go down a rabbit hole on because you know, it seems to me that eliminating the capital gains tax would be very, very beneficial to capitalism in this country.
Oh yeah. Yeah, that's why I used to go to Israel. People would wait till they're over 50, move to Israel for 6 months. They come back, they have Israeli passport and a US passport, and then all their US accounts say Bank Leumi. Um, and there was no there was a flat capital gains tax, 15% in Israel. I don't know what it is now, it's changed. But they also did that for state tax reasons. Now the state taxes have gone up, fewer people do that. But Israel has a very powerful passport. And it's a good passport to take advantage of. And it's why London grew. These people would move their money to London, and if you were a foreigner, you didn't pay the taxes that the Brits paid. And they wondered why all these well, this is when London was prosperous. Now it's been overrun by refugees. But uh 25 years ago, they were wondering why all these rich Middle Eastern people were living in London. And it was a tax haven.
Yeah.
So the US is very odd. They have a worldwide tax, and so you could be in jail in Turkey and you have to pay taxes. Um, what's also like Canada north of you is a pretty good passport, but now Canada's charging an exit fee on you when you leave. So Canada's been losing people
Yeah.
with all the immigration they have. So they've had some issues, and but it's interesting to watch money move around. And I guess the country that's really hurting the most right now is Britain because Starmer went to tax the rich, and they just moved the more money to Guernsey and Jersey, which are these islands offshore near Normandy, and who knows where they're living now, but there's no worldwide tax. So.
Louis, a theme that's coming up in today's podcast is exogenous risk. And I just thought of another one while you were speaking there, and I wanted to get your thoughts on it before we go to some individual stocks that we can offer for folks. And that is to talk about the government shutting down potentially. It does
Uh-huh.
seem like it's kind of like Lucy pulling the football away. There's been a risk of a shutdown every 6 months, it seems like. What's
Yeah, well,
different?
they'll get together, and if it helps them politically, they'll do it. And if it doesn't help them politically, they won't do it. So they'll probably be the latter. But they're already threatening layoffs in the government division. So I'm not anti-government shutdown. It's a big bureaucracy. It's
But what
getting
does that do to the market if we shut down?
it'll hurt it temporarily, but we need the Treasury Secretary to make sure that all the payments are made. You know, so we
Hmm.
can't shut down paying on treasuries and all that stuff.
Hmm. Yeah, and again, risk after risk after risk, and yet we're at market highs, seemingly a straight line higher. We did get a little bit of a correction, not even a correction, a down day. Let's just call it that. Yesterday, it really barely moved the needle.
Yeah, we did. But gold was going up and all that stuff. Jamie, I have a delivery here. I have to take. I apologize.
Okay, uh,
I'll be back. I don't know if you can hit pause or cut, but it's a
I'll hit pause. Yep.
okay. Okay.
Louis, we were talking about the government shutdown as an exogenous risk, and I guess the bottom line is we are probably long overdue for a bit of a pullback. You were talking about gold doing extraordinarily well. Let's finish up the podcast today with some individual stocks. I've been talking all week about Freeport-McMoRan I'm licking my chops. I can't wait to get into this one. FCX is the ticker. Are there any names that you're liking right now?
Well, I've been studying Bloom Energy. This is a company that's benefiting immensely from Oracle's data center build out. Those are fuel cells in the data centers to make them more efficient and greener and all that good stuff. Their fuel cells use hydrogen, but the company is called Bloom Energy. It's been a very hot stock.
The ticker
Uh,
on that, by the way, is BE, I
yeah,
believe.
correct. And so it's still a very good buy right now. But I would encourage if you want to buy an explosive stock on a pullback, that would be it. Their just so you know, their forecasted sales are 29.3%. Their forecasted earnings are 1,091.5%. This is a company that's been making a transition from negative to positive earnings. Their earnings are positive now. Their surprises in the last two quarters were ridiculous. Last quarter was 457.1%. The previous quarter was 147.4.
Hmm.
So,
Louis, one of the hottest sectors is power generation and specifically nuclear. I don't know your grades or views on.
we have GE Vernova.
Okay.
and which make the turbines. There's a 5-year order backlog on turbines. GE
What
Vernova.
about Oklo? OKLO.
Okay. I'm sorry. I'm pulling it up. Okay.
OKLO. Yep. That's been on fire lately. It's been pulling back. Is this
I see
a
it's
buy
down
the dip
today.
opportunity?
Um,
And do you like it to begin
I do
with?
not have a sales or earnings. Well, I don't have a sales estimate for it. Operating earnings is supposed to be down 53.8. So, still have negative analyst estimates through next year. So this must be a small modular reactor company.
It is. Yep.
Yeah. So, other than, creating a hole in the earth that ends life as we know it, there's nothing
China, the
wrong with
China
that.
syndrome. Yep. Yep.
I do recommend Camco CCJ, which is uranium. But I have a neighbor up the street, Franklin Haney, who's got a nuclear plant in Alabama he's trying to start. Poor Franklin's on a feeding tube, and he paid 110 million for this nuclear plant trying to restart it. But
And
I don't know that
he sounds like a visionary that got involved, a little bit unfortunately for the sake
Franklin's an interesting guy, but
too
he was
soon.
Bill Clinton's biggest supporter,
Hmm.
and now he's the biggest landlord in Washington D.C., including he owns the tollway to the Dulles Airport. So
Ah, interesting.
helps to have friends in high places. But the yeah, quantum computing, small modular reactors, these are big theme stocks that people like get excited about.
Right.
Uh, I'll get more excited when they earn money. So before they earn money, I want to see strong sales. And right now with OKLO, I don't see the sales growth right now. I just see negative earnings.
And that, so that's a good lesson for folks, and probably why you prefer a stock like GE Vernova.
Yeah, yeah, and GE Vernova is making a transition too because they had all the green stuff that's being cut back now.
Yeah.
Trump lost on the windmill thing in Rhode Island because they had the foundations to put the wind turbines up, and he stopped it, and then they won in court. So I guess they're going to finish the project, but he still doesn't like the windmills. Okay.
Okay. Louis, good stuff as always. Let's leave it at that. Next week we get a jobs report, so we'll have plenty to talk about in the next episode of the Rational Trader Podcast. This is JD for Louis Navalier. Thanks for joining us. We'll be back next week. Take care, everybody. Have a great week, and we'll see you next time.